Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 10th, 2023. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. These actions is what keeps this channel going, and additionally, if you like the button, make a comment or share this video, then more people will see it because it will bubble higher in the search results. Let's get started. This week I'll try to give a little bit more of a longer term perspectives. We'll look at some weekly and monthly chart. For oil specifically, we'll look at monthly. For weekly, we'll look at S&P 500. Stocks are setting up a coiling up tightly, and there's an inside wick, and I'll show you what I mean in technical trading. We'll also examine a couple of possibilities. One is for stocks to trade sideways, one is for them to break higher. Gold also has firmed this week despite the weak, somewhat stronger dollar as well. And like I said, oil, we'll look at the monthly chart and try to see if oil has bottomed at least temporarily. Okay, S&P 500, this is TradingView.com interface, TradingView.com. You can open a free TradingView account. TradingView.com account is free. Once you open the free TradingView account, you can also have these lines on your chart, this green, blue, red, and yellow line. You can find out more about them by going to the description of this video or going to MasterChartsTrading.com. And once you sign up, you can have the same lines on your chart. So looking at this chart right now, I'm using S&P 500 mini futures, symbol ES1 exclamation point on TradingView.com to look at stocks in general. So up until very recently, again, if you listen to my previous videos, I was pretty bearish on stocks until relatively recently, until about October, November. So you can see this hammer candlestick. I already explained what it is. So hammer candlesticks usually mark the bottom of the trading range. Previously, we were selling the stocks short very successfully. You can see a couple of opportunities to sell short back in September and August of 2022. Then we had this hammer candlestick and a green giant candle on November 10th. The hammer candlestick happened on October 13th, 2022. I was then very reluctant to sell short because this is very bullish looking candles, and I don't want to be selling in an uptrend. So far, my ideas were pretty much correct. You can see downward facing arrows, which were signals to sell short. Signals to sell short occur when we have a stock close above the red line or make a high above the red line, where I'm hovering, this red line, and then close below it. So you can see multiple instances of that, but the movement to the downside was relatively negligible. Here's the bottom from 22nd of December, and when again moved higher. Again, we had a couple of sell short signals. Latest one right there on January 19th. Clearly it did not work at all. We did not take those signals. They're purple in color. Notice that these guys here are red in color. So they were not taken. And then now we moved pretty high. In fact, by some measures, notice on Thursday, the 2nd of February, last Thursday, we had a touch of this blue support resistance line. Now, on this chart, we simply touched it. For S&P 500 ETF SPY, I already showed this. Somewhat small discrepancy. SPY actually closed above it. So, based on this, this means that we are in a bull market. Now, where I'm hovering, it says ADJ, where I'm hovering at the bottom. This adjusts the data for dividends. So if I unclick it, you can see that we have not closed above the blue support resistance line. So without the dividends, SPY does have a dividend. S&P 500 ETF SPY has dividends. Without dividends, we have not yet technically entered the bull market. So we need to be aware of that. Excuse me. Now, looking at the futures, S&P 500 futures, so far technically we haven't, but we're really close. Now, here what we can see is I drew in this what's called ghost fit, ghost projection, a projection of price action into the future. Now, how did I come up with it? So I can turn on the offset for my indicators into the future, and they go as far as April 24th right here. So basically until the end of April. So notice until end of March, this blue line is basically straight, and then it starts to drop lower. So I've noticed that quite often the price does follow the line, especially when it's moving like that. So this price action is relatively reasonable, I think, because right now we have possible resistance here that reasserted itself on the 2nd of February, last Thursday, and now we're might move lower. So why might we move lower? Because we have come a long way from the bottom here, from the bottom that occurred back in October, and we're relatively overbought over this time period. So a sideways action or a consolidation of some sort is reasonable to expect, and that's just one of the possibilities. Obviously there are myriad of possibilities. We could just skyrocket, or we can completely collapse, or they can close the markets. That's also a possibility. But I think this is a reasonable, something reasonable to expect. So I'm thinking that we're gonna bottom out into the early March and start rising, and then most likely by May we're already going to be higher than today's prices. Okay, so this is on daily chart. What does daily even mean? Daily means, see where I'm hovering, it says 1 day. Each candlestick is a day's worth of activity. If we look on weekly chart of S&P 500, this is a weekly chart. Each candlestick is a week's worth of activity. See where it says 1 week. You can change it by clicking on that and changing the interval. Okay, so when you change the interval and you use my indicators, you need to change the length. On the weekly chart, use 52 as length. It says right there, daily use 250, weekly says use 52. Notice on daily chart here, I am using 250. Okay. So when you switch between them, make sure you change the settings. So on this chart, we don't really even need the indicators. I just wanted to show you how some people who look for patterns, chart patterns, think. So this is a triangle consolidation, what I'm showing here. Why is it a triangle consolidation? Because notice this last week, that's from Monday 30th of January, and this week that started on Monday the 6th of February. So what's important here is that this week is entirely within the trading range of previous week. So we call this pattern an inside week. This week, today's week, this that ended today, is inside the previous range, previous week's range. So it's a pretty clear looking triangle. Now, it's not yet complete. The triangle consolidation will be complete when we have a breakout out, up, or down from this pattern. It's anybody's guess, obviously, which way it's gonna go. However, if I am correct and we are in an uptrend, we're in a bull market now. We haven't yet, like I said, I have a dilemma. On last Thursday we touched this blue line, but on S&P 500 ETF SPY we actually closed above it. So by one measure we are already in a new bull market. So I have a bullish bias right now. I think stocks will continue higher. So a breakout out of this pattern, a triangle consolidation, usually gives a good strong kind of move afterwards. So it's reasonable to expect that after this breakout, after we close above this line, or possibly above the high from Monday the 30th, from the week from last week, then we could significantly move higher. So alternative scenario is also possible. We could break down and continue lower, but because of the way I think the stocks have turned the corner, and I think they're now in an uptrend, it's reasonable to expect that we will break out of this triangle consolidation and continue higher. Looking at Dow Jones, not much has really happened. Dow Jones broke out into a new uptrend, clearly without any dividends or anything of that nature. Already it broke out here in late November. So it is above this blue support resistance line, meaning that it is now in an uptrend. Looking on weekly chart of Dow Jones, we can see that we're not far away from record highs. So record highs are, just a few percentage points away. Additionally, I think I already pointed out that if we continue higher towards this record high, then we will potentially have kind of like a cup pattern of some sort, like that. And usually those patterns, when they actually complete, when there is a breakout above this upper lip of the cup, they double the length, the depth of this pattern. So something of this nature is reasonable to expect. This is about 20% depth of this pattern, and yeah, we can move that much higher just based on this pattern alone. Will it actually happen? I guess we're about to find out. We're very close to finding out all of the answers. I think we will see some sort of a resolution by April, end of April. NASDAQ is dragging its feet. However, notice that we have cleared this red support resistance line on 1st of February. Here you can see where I'm hovering. And now we have retested this so far successfully. So notice we have touched this line right there, this red support resistance line. And this is a good sign. That means we have a breakout, retest. Hopefully we will bottom here and continue higher. So this is a very close to new uptrend, new bull market. We're whatever 8%, 9% away. It's not that much especially for NASDAQ. It's a more volatile kind of security. So also in the general video, or rather in my members only video, I will discuss some of the big stocks that comprise NASDAQ, and Apple is there, and it's approaching breakout level. So if you need to hear the discussion, sign up using the link in the video. Looking at Russell 2000 small caps index broke out into the new bull market right there on 1st of February, and also has pulled back so far. You can see the patterns are very similar because major indices have a very high degree of correlation, meaning that they move together in lockstep, and the way one moves, the other should follow. So far no diversions, and we're looking at Russell. We can also project action into the future. The Russell, you can see the lines are curving down also into April, late April, but notice that the price is actually already pretty close to where it would be, the blue line would be. The blue line is very important if you're trying to determine if the security is an uptrend or a downtrend. In this case, we're up in an uptrend, meaning that an uptrend implies for stocks new highs, new 52-week highs that could be set very soon. So next few weeks to month will be quite interesting, I think, both in terms of stock market. Also, if you are following along in the European action of war in Ukraine, both countries are gathering very large forces, the Ukraine and Russia, trying to have their own kind of offensive operations. But I think there will be first a major offensive by the Russians, which Ukrainians must hold out and then counterattack. And like I said, this is it just goes, very strangely according to the stock market. I think the way things are gonna go in the next few weeks, I think also will determine the fate of war, and vice versa. Perhaps the fate of war will determine the way stock market turns. Moving along to currencies, the Forex universe, here is dollar currency index, DXY. This week I decided to discuss junk debt high yield bonds in the members only video. Again, if you need to sign up there. So looking at dollar currency index, up until relatively recently, we can look at weekly chart of dollar. Here's the dollar on the weekly chart. Again, each candlestick is 1 week's worth of activity. Here's the breakout on the weekly chart back in July of 2021. A gigantic move that made multi-year highs versus, for example, British pound, and multi-year highs, actually all-time high against British pound and multi-year highs against multiple other currencies. Topped out on week of September 26, where I'm hovering, and then continued lower. So right now, I believe dollar has topped, and in fact, it has entered a downtrend where I'm hovering. This is the beginning of a downtrend in the week of 9th of January, so second week of January. However, nothing moves in straight line, especially in trading. And again, you can see that I put in this ghost feed into the future. I put it in on Friday, the 27th of January. Why did I do that? Again, because we can project my indicators into the future. And there it is. There's the projection. So right now we seem to be following exactly the red line. So we kind of, bottomed right there on 2nd of February, and then top, and then we moved higher, and we're basically moving along this red line. And I think it's reasonable again to expect for the dollar to continue higher. The topping out action, right now the indicator lines top out on week of April 10th. Oh, this is actually daily, so on April 10th, 11th. So again, this is interesting. Again, this is interesting because I think war in Ukraine, if I am following it very closely right now, so the counteroffensive, Ukrainian counteroffensive, most likely will happen around this time, April, May. And now the dollar is rising, and I think eventually it will top out and continue lower. So why is this important? It's important because we trade gold. Gold is notice it's XAU, gold divided by USD. So right now gold, or rather when the US dollar is getting stronger, gold will continue lower, because the US dollar will get bigger and will pull this currency pair lower. Isn't indeed what's happening? I put in this ghost feed. I put it in on January 23rd. It's not exactly, but I did predict a drop for gold, and it's indeed what's happening. Now we can project the indicator lines. This is exactly why I projected it this way, because notice that the indicator lines continue lower. So I have a feeling that gold will bottom out sometime in March, possibly as late as mid-April, but I think gold is in a new uptrend. This is a new uptrend that started in January, and also gold could be in a major approaching a major breakout. I already showed this one before. I'll show it again. So if we get, you know, this is a weekly chart, so we're going back to like 2020. This is a potential cup and handle formation. So if gold kind of does what it does, what I'm hoping it will do, then we will see a sort of like a duplication of this pattern. This is about a 20% pattern. If we see a duplication of this pattern, we can see gold around 2,500. When, you know, 23, end of 23, possibly beginning of 24. Again, if what's happening is correct, which means that we need to see a breakout above previous highs, which were around 2,100, 2,050 maybe or so, 2,100. If that happens, then we can see a road is clear for gold to continue higher significantly. All right, so that's gold. So gold, I mean, we already sort of dropped what I was predicting is we're gonna drop, but the low for the blue line right now is at like 1819, 1819. We're already 1865, so we're not that far off. So maybe we'll just kind of quickly do this dip and then just continue higher. You know, predicting the time is always the difficult part, but overall right now I'm seeing what I predicted. It's following this ghost feed that we started back in January 27th. And finally, I wanted to show oil. So if you heard the news today, Russia has cut oil production by 500,000 barrels per day. It's questionable why they did that. Most likely just have nowhere to put it. Now, I again don't really care much about why things are happening, but I do care about what should we do about it. So on this chart, it's not very obvious what's happening. Yeah, this oil, yeah, we're in a downtrend. Yeah, we're selling it short. This is a latest alert, for example, to sell oil short on Wednesday, 9th of November. And it was very successful, clearly. Oil went down like 18%. So if you put puts on USO, for example, you're in very good shape. We can look at weekly chart of oil. It's not really showing us much either. However, if we look at monthly chart of oil, now that's really kind of interesting. So this is again purely from just reading candlesticks. You have to realize that each of these candlesticks is a whole month worth of activity. So this is a month of December, this is a month of January, and this is unfinished month of February. So you can kind of see that we have a potential at least triple, possibly quadruple bottom. See, there's this shadows, these tails. First one from the November, but I'm more interested in this tail from December, and then again from January, and then again from February right now. So these are all three hammer candlesticks, and hammer candlesticks usually imply a bottom of some sort. So it is reasonable again to expect at least a bounce for oil. Okay, we can look where that bounce will take us. Now, projecting into the future really doesn't show us much, but I think it's again reasonable to expect for oil to bounce from today's prices at least till the red line. So that's 16% higher. So we're looking at like $92 per barrel. This is light crude oil, so United States mark. When most likely into April again, so something of this nature. So that sometimes is useful to look at monthly charts as well. I don't normally do that, but sometimes it's kind of interesting to look at them, and you can see this is a very good looking bottoming pattern for oil. So yeah, reasonable to expect at least a little bit of a bounce for oil to relieve the somewhat oversold conditions. All right, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up for one of the products. I have 2 products and 2 packages. One is a trading indicators. So trading indicators are these lines on the chart. You can trade pretty much any security. They're available for TradingView.com interface. This is a TradingView.com interface. You only need a free TradingView account. Once you sign up on my site at MasterChartsTrading.com, I will open the door for you on TradingView.com. Newsletters are also available. I send out daily alerts, and I send out a weekly members-only video. So you can see this week we're going to cover quite a bit of various stocks. So I cover ETFs. There's also Bitcoin, Ethereum, some of the other ETFs, also world ETFs, for example, Japan, South Korea, Switzerland. Also, I cover large cap stocks like Apple, Dow Incorporated, Netflix, Meta, Pepsi, and some of the more speculative and smaller cap stocks, for example, Adobe, Nvidia, Pinterest, VMware, Genius Sports. I don't know, make a comment if you know what it is. And also gold related, like Royal Gold, Hecla Mining, and Eldorado Gold. Of course, the best deal is to get both trading indicators and newsletters at $59.95 per month. It's a good deal. Again, please do not forget to make a comment, ask me a question, and of course, hit the like button. This will help me greatly, and it will help other people see this useful information. Thank you again for watching, and have another great trading week. Bye-bye.